Do you ever wonder why the CPI doesn't actually match reality? Well, we're going to tackle that issue in less than 12 minutes. Hi, this is Steve Rumsey, Chief Investment Officer of Optimus Advisory Group. Let's get to the graphs. Okay, first off, here's the CPI headline number we always see. It's currently running around 2.9 as of December. I think it bumped up a little bit recently, but you can see that it stopped falling and is heading a little bit higher, not what the Fed wants to see. We need to be at or below 2%. Now, this is a much more accurate way, I think, of looking at inflation. So, this is the Sticky Price Consumer Price Index or Sticky Price CPI. So, with this, it's a subset of CPI categories. They only pick those that rarely change pricing. So this gives you a slower uptrend and a slower downtrend. Running at 3.7% is not good and is way above a 2% target. So we'll see what happens from here. Okay, now here is Trueflation, the real-time inflation tracking. We're currently running at 2.6%, but the most important thing on this graph is the aggregate number. So we're hitting 26% aggregate inflation since COVID. That's very big and why people are complaining so much about inflation. But before we get too upset, take a look at Argentina's aggregate inflation, over 2,500% since COVID. Now, new president's doing a fantastic job of dropping that, but what a chore that's going to be. Okay, now here's one of those graphs I just love to talk about. This is the inflation rate for rent across the country. So people will say, well, what are you complaining about? Look at it, it's below zero now. Yeah, that is the rate of change. So it's a rolling 12-month cycle where they're figuring out how much inflation has gone up over the last 12 months. So you can see it peaked way out there at 17% in late 2021, which the COVID rampage just drove rents into the stratosphere. Now it's come down a bit, so it's actually off the peak. You can see it's below the zero line now, which is great for renters. But here's the bigger issue. This is since 2017, but let's just take a look at, say, 2020. What are we at? 1,100 rent, something like that. Now rent's over 1,400. So in 5 years, the average rent has gone up $300 a month. And renters, which make up tens of millions of people in this country, are being squeezed by rents that are not coming down and have shot up to this new level and plateaued. And this is pretty much what the BLS, the Bureau of Labor Statistics, is calculating for shelter, that it's gone up 27% since COVID. So this is where they contact homeowners and say, if you had to rent your house out, how much do you think you could get for rent? So they don't take the average rent. They are actually surveying people to ask them how much they think they could get for rent, which I guess is the best way they can do it. 27% since COVID. Now, take a look at some of these rents across the country. So this was done by CBS News from COVID until the end of last year. We're seeing places that their rents have skyrocketed, and these are popular major cities. So Naples up 64% since COVID. San Diego up over 40%. Riverside, California, which is east of Los Angeles, up over 40%. Trenton, New Jersey, up over 40%. But take a look at those bars in there. Some of these rents have gone up 7, 8, 900, $1,000 a month since COVID. This is absolutely insane. So take a look at this graph of multiple cities and how much their rents are over the national average. But look at that longest bar. It's Irvine, California. That's where I still have an office and my business partner's still there. And we moved out to close to Nashville. But look at that. In Irvine, the average rent is over $3,700 a month. And it's 138% over the national average. Washington, D.C., 63% above the national average. Los Angeles is over 100% over the national average. Now, I love this graph because this is true apples to apples comparisons. So look at California. You need to make $48 an hour or around $100,000 a year to afford a two-bedroom apartment. As a contrast, Shoot down to Tennessee, you need half that much. So you only need $24 an hour. You only need to make $50,000 a year to afford the average two-bedroom apartment in Tennessee. So when you look at those top bars with California, Massachusetts, New York, places like that, the vast majority of the states in this country, you don't have to make that much money to afford a two-bedroom apartment. It's just in certain states that have extremely high rents and have good paying jobs, but man, 100,000 a year just to get a two-bedroom apartment, that's pretty tough for most people. And remember, tens of millions of people rent. So, people will say, well, yeah, but I'm not moving from California, Massachusetts, New York, or whatever to Tennessee or Texas or Florida or any of those other states because they don't pay as well. That's true. But when you're comparing apples to apples, if you only have to make 50,000 and versus 100,000 to afford a two-bedroom apartment, if everything else was equal, groceries and utilities and everything else, you are way ahead by moving. Okay, this is a busy graphic. We're just going to hit some headlines. So, 9 million buyers have been priced out of the housing market because of sky high home prices and sky high mortgage rates hovering at 7%. Those people have to rent. Also, the number of households last year grew 1.5 million. So we have 1.5 million groups of people needing to find housing. That drives prices up as well. Finally, some analysts are saying that we are 2 to 5 million housing units short for our population because of COVID, global supply chain problems, skyrocketing lumber prices, shortages of labor. We fell way behind in how many housing units have to be built to sustain our population. I don't know how many years it's going to take to catch that up, but we'll have to wait and see. This is busy as well, but this is really interesting. Did you know they do not include homeowners insurance in the CPI calculation? No, they include renters insurance. Now, why does that matter and why is that important? Well, look at that bottom green graph. The average renter pays $170, $180 per year on renter's insurance. Dirt cheap because you're only insuring your possessions. You don't care about the structure. That's the landlord's problem. Now, homeowners premiums have gone from $1,300 a year on average to almost $2,200 a year on average. That's a huge spike. Matter of fact, that is 71% higher since COVID. Huge increase. So you can see why they don't want to include homeowners insurance in the CPI. If they had done that, according to Bloomberg, it would add 0.8% to the CPI number. So when we were at that first graph, we were looking at 2.93% year over year inflation. It would be more like 3.7, 3.8%, way above 2% target. It's another thing that is squeezing people, especially middle and lower class income people. Okay, who better to go to about grocery store prices than Instacart, since they deliver groceries all over the country? Average family of four spends $1,400 a month, over $16,000 a year on groceries. So when that grocery store bill keeps skyrocketing and goes up 25, 30% in 5 years, now you can see why people are screaming. Finally, the consumer price index for food. So we can see 29% growth, like I just mentioned, since COVID. So it's not a mirage. Grocery store prices have actually skyrocketed. They've stopped going up as much recently, in spite of eggs going through the roof, but that's a huge hit to people's pocketbooks. And just to throw this in for good measure, the chart on the right is the Invesco agriculture ETF, known as DBA ticker symbol. This tracks futures contracts for everything that goes into your grocery store. So we're talking about wheat, soybeans, orange juice, livestock, cattle, pork bellies, all kinds of things that go into your grocery store. Those futures contracts have gone up almost 80% since COVID. That's what's driving some of these price increases in the grocery stores, and it's not letting up. It keeps rising. Anyway, I hope you enjoyed this explanation of inflation, the CPI number, what's under the hood, and why it doesn't seem to match reality. Watch for more episodes just like this going forward. Thank you for watching.